completely crippled.
4 surgeries, trying to heal a detached retina.
Like, I can't eat. 4 years of this pain and throwing up.
In 2017, we had found out he had a tumor.
They wanted to do an operation because I had 90% block or 80% blockage in my heart. And I didn't want them to do it because they tried killing me the first time they tried doing that, putting in a stent.
I was born with muscular dystrophy, a rare form. There's 43 different forms, and mitochondrial disease, which is a genetic defect in every cell of your body.
But that man has not had a breath without assistance in over a decade.
Blood disease, liver disease, kidney disease, any disease. They brought unto him all the sick. And no matter what their sickness or what their disease, he healed them all.
He left here, took the oxygen off of his nose.
I looked at her and said, I can see all those holes.
Their test, and they said your respiratory function is above anything that we can imagine.
It was the last day that I used a walker.
Yes, I just believed it, and it happened. Just his words were so powerful. It just moved me.
When you touched me, it felt like when they gave me the injection with the stuff to go through to see what the arteries would block. It just all ran through, just hot as it could be.
And he saw that the tumor was gone. Completely gone, there's nothing there. The tumor looks like it's healed. The bone looks completely healed, like nothing was even there. There was no surgery that ever happened or anything on that bone.
You've already won the victory. Hallelujah. Shout it out. I've already won.
Why should you come to RTBI? The education that you're going to experience here is like no other. You're going to get a solid foundation on the Word of God, but you're also going to be exposed to the power that comes behind it.
I was listening to Pastor Jonathan's sermon, and at the end of the sermon, he gave an altar call for those that feel a call into full-time ministry.
I decided to act and move and apply, and I got accepted, and I can assure you that this Bible Institute has taught me so much. They teach you the Bible, and they teach you the true, full gospel.
The fire of God is coming upon teenagers, college students that say, I don't care about the approval of Viacom and MTV and the movies. I've made up my mind. I'd rather endure the shame and disgrace of this world and have the pleasure of God.
And on that floor, I cried and I cried and I said, Lord, I know that you hear me. And the Lord spoke to me and said that if I won't move here because of fear, I will never go to the nations, because how much more will I yield to fear then? And in that moment, I knew that my life isn't going to be ordinary. In that moment, I knew that it was up to me how far I'm going to go with God, and that it's up to me if I'm going to make this decision. It changed my life forever.
First, I'm going to be strong in the Lord and the power of his might. So congratulations again for being what's right with America. There's enough principled people full of God's fire in this room to shut down every plan of the devil for this generation. You'll do what God's called you to do and be who God's called you to be for the rest of your life.
Brother Jonathan, Sister Evangelist, this is Stephan from Feed the Hungry reporting to you in Nicaragua. To everyone who's part of Revival today, I want to say thank you for answering the prayers of hungry people all around the world throughout this year. Because of you, the ministry of Feed the Hungry this year has just expanded to reach so many more hungry people around the world. We've seen about a 40% increase in our ministry activity. Because of you, millions are able to look up to heaven each and every day and thank God for food in their bellies and for food for their children. I'm in Nicaragua this week, and one particularly heartwarming story was a woman we met who is in a little village. She's part of the feeding, her kids are part of the feeding program, and in speaking with her, asked, what does this food mean to you? And she said, you can never understand what this food means to my children and me. And I thought about that for a minute, and it's so true. We have no capacity to identify that kind of desperation and hunger. She said, it used to be when I would put my children to sleep, they're crying, I'm a single mother, I put them to bed knowing that they would have nothing to eat the next day. And I just put them to bed on an empty stomach. And their stomach is painful and they're crying because of it. She said, when the feeding center started and I saw the food there day after day, it gave me and it gave us hope. Thank you for giving hope to mothers, to children, to people in great need around the world. We've responded this year to the Ukraine war conflict with over 20 million pounds of food going into that region, into the hands of churches to give out daily bread to those that are praying for something to eat that day. We've responded in the United States with hurricane relief down in Florida, and right now, well over 425,000 children get to look up to heaven and taste and see that the Lord is good because of you.
Coming to you from Main Street, America, in the heart of Rust Country, home of industrial titans like Carnegie and the Mellons, we are bringing you market analysis, news, and everything you need to know about the economy and investing. Live from Pittsburgh, Pennsylvania, it's Check the Market.
Good morning, everybody. Welcome to Check the Market on this beautiful Tuesday morning here in Pittsburgh. Sun is out. It's beautiful. Good morning to everybody joining us. Luis from Pretoria, South Africa. Savannah, Nicole, Jason, Cheryl, Joanne, Ninja Buddha, Wayne from Buenos Aires, Dale, good morning. Gerald, you love that backdrop. I do too. It's a sunrise in Pittsburgh. Beautiful. Lowe's gang, where you at? Wilson, I'm assuming you are a Lowe's guy. The only reason I'm a Lowe's guy is because it's closer to my house. The other one's like 2 minutes further down the road, Home Depot. But we will be talking about Apple, be talking about Home Depot today, so make sure you share the broadcast. Jim Cramer does it again. But before we get into all of that, futures are, let's take a look. Futures are down on disappointing Home Depot forecast. Oil is up slightly. Where'd my mouse go? Well, it's the good thing that they make touch screens now. Bitcoin down, Ethereum down. Well, we'll see where everything is in about 14 minutes when the market's open. But let's get into it this morning. That is true. Ace is good too when in a bind. I've been there a couple of times. Harbor Freight. Love Harbor Freight. Their tools, I know they're supposed to be like some, cheap company or whatever, but their tools, I'm telling you, they have never let me down. Grainger? I don't know about Grainger. I've bought a couple things from Grainger and I've had to return a couple things. All right, well, let's get into it. Let's see the first article. Let's save this one for a little bit later. Let's start with the Jim Cramer and get right into Home Depot. Get right into the good stuff here. There we go. By Dividend Hero, Jim Cramer strikes again. Exactly 1 week ago, he was bullish on Home Depot. This morning, Home Depot just reported their worst revenue miss in 20 years. You can't make this up. Home Depot posts worst revenue miss in about 20 years, lowers forecast as consumers delay big projects. Continue. Do you have the video of him? Did you get that? Why betting on Home Depot could be a win right now, according to Jim Cramer. This was on May 9th. We are now on May 16th. They reported earnings. Look at that. Continue. Can you get the video too? Awesome. Oh, okay, awesome. Home Depot plunges after worst revenue miss in 20 years, slashes guidance, blames weather, lumber, and faltering consumer. Ahead of this week's earnings season-ending barrage of retail data, analysts and traders were asking if the strong consumer spending momentum from early in the season would carry through, or if it would see an uglier side to the U.S. consumer. The answer was delivered moments ago from Home Depot. It is decisively the latter. Home Depot reported its biggest revenue miss in more than 20 years and slashed its outlook for the year as consumers delay large projects and buy fewer big-ticket items like patio sets and grills. The latest signs consumers have maxed out their credit cards after splurging on Weber grills, hot tubs, and patio sets during the pandemic years. Now, this is not all bad news, because if the majority of consumers are no longer buying these big ticket items, that means that we'll be able to get them for a good price, and I'll be buying myself a Traeger here very shortly. The largest U.S. home improvement chain said comparable sales are expected to decline between 2% and 5% this fiscal year compared with last year, both missing badly the consensus estimate of negative 0.73%. Home Depot previously forecasted sales would remain flat. It blamed lower lumber prices and bad weather on the rough start to the year. That being said, that is also an opportunity for you. If you were one of the people who was holding off on getting your deck redone because of the high lumber prices, we now have lower lumber prices. I've been wanting to extend mine in the back, so this summer might be the perfect time to do that. Continue. For the first quarter, comparative sales fell 4.5%, far worse than the expected 1.4% drop. That is a big difference. The latest indication that the housing market boom is cooling, which may be a symptom of the Federal Reserve's restrictive monetary policy, is working. After a 3-year period of unprecedented growth for our sector, during which we grew sales by over $47 billion, we expected that fiscal 23 would be a year of moderation for the home improvement market. Our sales for the quarter were below expectations, primarily driven by lumber deflation and unfavorable weather, particularly in our Western division, as extreme weather in California disproportionately impacted our results. We also observed more broad-based pressure across the business compared to when we reported fourth quarter results a few months ago. Despite a more challenging environment, our associates maintained their relentless focus on our customers, and I would like to thank them and our partners for their hard work and dedication. While the near-term environment is uncertain, we remain positive on the medium to long-term outlook for home improvement and our ability to grow share in a large and fragmented market. I agree with them. I think that Home Depot is going to do well in the long run. It's still a good company to invest in. And if you're investing long-term, then here's an opportunity for you to buy in once they find the bottom. No, Bethany, we're not getting a hot tub. I want to get some nice big patio furniture that I can put out there. Good morning, Cheryl from Crestline, California. Thanks for tuning in. All right, let's keep going. Did you get the video of Kramer? Here we go. Never forget when Jim...
If you Renaissance, and you go through them, they're the ones who are winning this. But they're...
What did it say?
Okay, but if you...
In the tweet. Never forget when Jim had his entire career exposed on live TV. So here you go.
Okay, but if you Renaissance, you go through them, they're the ones who are winning this. But they're winning. What is like some? There's another season. You're a stock picking guy. That's your whole mantra. That's your whole reason for existence. Look, that's not working. No, it is working. If you pick the right. All right.
Yeah, because he doesn't pick the right stocks. Did you see how red he got? Let's see it again. This is horrible, but fun.
Okay, but if you Renaissance, you go through them, they're the ones who are winning this. But they're winning. What is like some? There's another season. You're a stock picking guy. That's your whole mantra. That's your whole reason for existence. Look, that's not working. No, it is working. If you pick the right. All right.
That is right. Bless his heart, Joanne. I agree. He has blocked so many people on Twitter. It's hilarious because what people will do is they'll tweet at him. They'll be like, hey, listen, remember when you said this a few days ago and now the stock has gone down by 10%? And then they'll post the very next post in their thread will be just, you have been blocked by Jim Cramer. There we go. So Dividend Hero was blocked by him. He's just one in a long list of people that have been blocked. Oh, man. All right, continue. Home Depot just forecast weak consumer demand. Here's what that could mean for the rest of the economy. Let's see it. Just an awful earnings report from the stock market's most important retailer on Tuesday, Home Depot. Bottom line, the broader market implications of Tuesday morning's post-earnings stock move for Home Depot are going to be significant, and don't expect much improvement from the home improvement retailer anytime soon. Continue. Home Depot is tumbling 5% or $13 a share in pre-market trading. That's worth about 100 points on the Dow Jones Industrial Average, and they are down about 103 points right now, and should take a bite out of the S&P 500 too, which is down about 11 points, 0.27%. Remember, it's the most impactful retailer in the price-weighted Dow, having almost double the weight of Walmart, since it's almost double the price. And despite Walmart's much larger market cap, as we highlighted yesterday, Home Depot has both a greater index and earnings influence in the S&P 500 due to the Walton family's hefty stake in Walmart that reduces its weighting in the main equity benchmark. Lowe's is also down 3%. Pre-open in sympathy. Look at that. Lowe's is sympathetic of Home Depot, but it won't report results until next Tuesday. Continue. Continue. Home Depot's EPS beat by 2 cents as a 3.9% reduction in SG&A costs helped a little. However, it's still the retailer's first earnings decline since May 2020. But the real story is demand destruction. As indicated by the company's huge revenue miss, sales were 2.7% below Wall Street's expectation, its biggest revenue miss since November 2002. It's also the second straight revenue miss for the home improvement retailer, which follows 12 straight revenue beats. It's also the biggest revenue drop since the financial crisis. Revenue down 4.2% year over year in the latest quarter. Comps came down 4.5% versus down 1.6% consensus, with transactions falling 4.8% and average ticket basically flat. Pretty darn ugly. Continue. It's true. Wilson says, if Home Depot didn't spend so much on a catchy theme, then they may have some backup money. That is a pretty catchy theme. So what's hurting demand? A number of factors in Q1. Extreme weather in California hurt, but problems stretch beyond the weather. There's also lumber deflation, but most importantly, as CEO Ted Decker flagged, we also observed a more broad-based pressure across the business compared to when we reported fourth quarter results a few months ago. Consumers are running out of money, supposedly, and they're cutting back on projects, etc. The company has cut its fiscal year EPS and revenue growth projections due to the weak Q1, as well as further softening of demand relative to our expectations and continued uncertainty regarding consumer demand. The new forecast is not pretty. Home Depot sees full-year revenue down 2 to 5% versus down 0.7% consensus estimate. Earnings per share down 7 to 13% versus down 5.7%. So that is a pretty big difference there. Continue. Here we go. I'm going to do an in-depth analysis of nuclear energy and investments related to nuclear energy, because there is some news that broke this morning, or that, while scrolling through this morning, I saw that nuclear energy is again being talked about in Europe. It's true, Wayne says banks aren't lending. It's a ripple effect. It is. And not just that, when they are lending with what prices are right now, it's cars are more expensive to buy because the majority of the United States, the vast majority of the United States relies upon debt to finance vehicles, debt to finance houses, debt to finance, televisions, furniture, etc. And if because interest rates are higher, all of those are more expensive. So that's the ripple effect. People are spending more on housing, so they'll be able to spend less on discretionary expenses. If they're buying a new car or if they're buying a used car, they're spending more on that vehicle. So there's less money for discretionary spending. And what looks like the stimulus from the COVID era has run out, and the savings rate is dried up, and people are spending more money on discretionary as well because of inflation. So there's less money for things like home improvement, etc. There is a rise in repoed vehicles. Yes, that is true. Newly launched Finnish nuclear plant sees electricity prices plunge by 75%. This is what nuclear energy can do. The commencement of regular output from a much-delayed Finnish nuclear reactor in April saw electricity prices in the country decrease by more than 75%. Let's see it. The OL3 nuclear plant completed the transition from testing to regular output last month to become Finland's first new nuclear power plant in more than 4 decades. It is expected to produce up to 15% of the country's power demand. And while the plant's production is still in its early days, its launch has had a considerable effect on Finland's energy prices, lowering electricity spot price in the country from 245 euros per megawatt hour in December to 60.55 per megawatt in April, a reduction of more than 75%, according to Physical Electricity Exchange, Nord Pool. Energy prices had risen sharply in the Scandinavian country after the Finnish government banned electricity imports from neighboring Russia last year due to the ongoing conflict in Ukraine. The utilization of nuclear power will be welcomed by Finnish consumers, particularly given the fact that Finland has the highest per capita electricity consumption in the European Union. We've had more stability in the system because of OL3. It's a huge nuclear plant, one of the biggest in the world, connected to a small system, said Jukka Ruusunen, chief executive of Finland's national grid operator Fingrid. It has its own risks, which we are happy to follow up on. Speaking to the National, Ruusunen explained that wind power is expected to be the largest source of energy production in Finland by 2027. I think they should just build another nuclear plant because wind isn't going to do anything. Those wind turbines, they don't do anything. You still need, I don't know how many barrels of oil to replace the oil in them. And then when they're finished, how do you recycle them? The only reason why wind is even being considered is because of the large amount of subsidies that you get from the federal government for building wind. But wind doesn't do anything. He said that wind power is capable of attracting greater investment, with nuclear energy seemingly being blacklisted by a number of environmental investors. But I think that's about to change. Continue. David says they will push nuclear as green because they have to. Yes, because there's no way they can make this green transition that they're talking about without nuclear power. Nuclear, it seems, is not very attractive for the investors. This is what they say, but it's an option, and I'm sure that our politicians would be in favor of these decisions. There are also business concerns. Who dares to put billions of euros into nuclear? It's better than putting billions of euros into wind that doesn't even produce any energy output. Markets are open. Ding, ding, ding. And the Dow Jones is down 111 points. $109 points. The S&P is down 12. The Nasdaq down 34. Bitcoin is Bitcoin is down 1.19%, 1.24%, 27,084. Ethereum down just 0.45% at 1819. XRP is at 42 cents. Dogecoin is at 7.2 cents. Solana, $20.85. Let's see what else we got. Avalanche is at $14.94. And Shiba Inu is at 5 zeros, 881. Down 0.9%. Those are some of the big ones here. BNB is also down 1.79% at 310. So that's what the market is looking like right now. Dow Jones down 146 points, S&P down almost 11, and the Nasdaq down 28, with the Dow Jones taking the lead in falling because of Home Depot, because of its weight in the Dow Jones dragging down the index. Continue. We can go back to that article. Nuclear power, however, continues to be an increasingly popular source of energy production in many EU nations, with France, Sweden, Poland, and Hungary all seeking to expand their nuclear energy output. Last month, Poland secured $4 billion in U.S. funding to help build 20 small modular reactors across the country by 2029, while Hungary is focused on expanding its Pax nuclear power plant. These small modular reactors are the ones that I think is what is the future of nuclear energy, because they're much cheaper to build, and some of them run off of the waste rods from the big nuclear power plants. So you don't have to bury them. You can just put them in one of these small modular reactors and keep energy going. The Finnish example is a testament of how nuclear can play a part in solving the current energy crisis, with consumers still paying sky-high fees for energy in many European countries. Germany, however, one of the most green in Europe, went the opposite way and controversially closed down its 3 remaining nuclear power plants last month. High inflation, high energy costs, and a sharp decline in industrial output have led to the International Monetary Fund predicting a recession is in the cards for Europe's powerhouse. Yeah, that's what happens. While German government officials say that energy prices are stabilizing, many will argue this is primarily because of the federal government has spent around $26 billion in taxpayers' cash on bailing out energy firms. As other European countries turn to alternative sources of energy production, such as nuclear, some have ignored the benefits and chosen to plunge themselves into debt because of the notion that nuclear isn't an acceptable energy source. What a bunch of baloney. All right, continue. Macron, the president of France, calls for a green pause. Even Europeans are getting fed up with costly regulations. This is by the Wall Street Journal editorial board. Let's see it. These are strange days when even Europe is starting to doubt the wisdom of its green agenda. Witness a speech last week by French President Emmanuel Macron, in which he suggested that Europe may already have enough environmental regulations and doesn't need more. Mr. Macron called for a regulatory break on environmental matters in Europe. We're ahead of the Americans, the Chinese, or any other global power in regulatory terms. Now we need to execute rather than add more pages by the hundreds to the Green Rule Book. Note he was speaking to a room full of industrial executives on how to reverse deindustrialization and revive French manufacturing. More remarkably still, Mr. Macron isn't alone. European Union proposals to ban certain pesticides and require governments to restore forests, wetlands, and other habitats are running into opposition in Brussels. The European People's Party, the main EU-level center-right group that includes parties such as Germany's Christian Democrats, has come out against these two components of the EU's Green Deal, boondoggle, on grounds that the plans would hurt farmers. Europe isn't abandoning its net zero follies entirely, but politicians finally are noticing that so-called green tape is pushing more and more manufacturing elsewhere. This is true. I was speaking to somebody from Germany the other day, and they were saying how many companies are, when it comes to like their more exclusive proprietary manufacturing, they still do that in Germany, but it's very specialized and you don't need a very large workforce for it. So you have companies that are working on, specialty whatever that is largely done by robots. You don't need a lot of people, But then the main manufacturing is being actually sent to the United States. A lot of it is being sent to the United States. So Germany is losing companies. I'm sure France is too, to the United States, where more manufacturing is done here than it is in in Germany and France. Continue. Which I thought was very interesting, because that's what these regulations will do. The passage of the Inflation Reduction Act in the US, replete with subsidies only Washington could pretend to afford, has highlighted the near impossibility of Europe's marshalling subsidies to match. The EU will attempt to impose a carbon border tax on imported goods to ease the competitive pressure on European manufacturers, but perhaps leaders are starting to worry that not even that will be enough to save European jobs. Mr. Macron should know what's at stake. His presidency was nearly derailed in late 2018 by the Yellow Vest protest movement against his green-motivated increase in taxes on diesel. His main opponent in 2 presidential elections has been Marine Le Pen, a tribune of blue-collar workers whose jobs are most at risk from the green policies he now wants to pause. Meanwhile, the Biden administration presses relentlessly ahead with onerous rules in the name of climate change that will raise costs for Americans on everything from electricity power to cars to home appliances. What a world when France is more sensible than the US. That's why I wanted to read that article. That is crazy to me, that the Europeans are starting to reconsider their green agenda, and the United States is pushing ahead full force. That is upside down world right there. But I'm sure that the Americans will come to their senses. We'll come to our senses and will push back against this, like a lot of states are already doing. Continue. David Sachs to join Rumble's board after fellow PayPal Mafia alum Peter Thiel throws support behind video platform. I strongly support Rumble's unwavering commitment to free speech in the face of growing censorship and government overreach. So Rumble seems to have a lot more big-name people and a lot more industry titans that are coming behind it. So Rumble is something that you can take a look at and see if that might be a worthwhile investment. I remember back in the day, 2004, around that time, maybe 2003, 2004, there was another platform, not YouTube, but there was another video platform that I would go on to watch, videos. And then YouTube came, and obviously that was a game changer, because now you can, watch all the videos you want on that platform, and it was better than the one I used. I was trying to find it this morning, what the name was of it, but I'd already forgotten. And so I thought to myself, if Rumble keeps going ahead and other video platforms come out like what they're trying to do with Twitter, where's YouTube going to be within the next 20 years? Is it also going to be a platform that we've forgotten the name of? Just like this other platform that I forgot the name of? I'm gonna have to find out what it was. And I don't even know if it's still in existence. It wasn't Vimeo. It was I forget what it was called. I'm gonna try and find. That is true. There have been a lot of DDoS attacks on Rumble, but there's been a lot of DDoS attacks on a lot of conservative websites. But security is getting better to thwart these attacks. It wasn't Periscope. This was back in 2003. Bethany, that was before I knew you. I was still in high school. No, it wasn't WorldStar. All right, continue with the article. David Sachs, a tech entrepreneur and member of the so-called PayPal Mafia, is set to join the board of the video sharing and social media site Rumble, a platform that over the years has become a bigger home to right-wing personalities and content. Sachs, the former chief operating officer of PayPal, will join the board in the second half of June in conjunction with Rumble's purchase of Kalen, a podcasting and live streaming platform Sachs launched. Rumble executives in a statement said the purchase of Kalen, which allows users to create and listen to podcasts would add an easy-to-use app and post-production tools to Rumble's ranks of online creators and their followers. Continue? I guess, Sandra. As a passionate proponent of the creator economy and the free flow of ideas, I strongly support Rumble's unwavering commitment to free speech in the face of growing censorship and government overreach. There's going to be a continued backlash to all of this. Peter Thiel, also from PayPal, I didn't know that he's one of the investors of Rumble, but I guess he has invested in Rumble. Rumble, I believe, is RUM. RUM is the ticker symbol, and they're trading at around $9 a share, I believe. Let me take a look here. RUM. Yes, $9.53 a share. They are down 4.6% today. They didn't have a good quarterly report. But if you are investing in it, this would be a long-term thing. But most likely there's going to be more video platforms that come out that take a bite out of YouTube, just like TikTok did with Instagram and Facebook. Continue? We can continue the next article. A stock market milestone. Apple is now worth more than the entire Russell 2000, which the Russell 2000 is an index of 2,000 smaller companies, and Apple is worth more than all of those 2,000 companies put together that are trading on public markets. Let's see it. The market capitalization of Apple has surpassed that of the entire Russell 2000 for 2 weeks, the longest stretch on record. Apple's market capitalization, which measures how much the company is worth based on the value of all of its outstanding stock, surpassed that of the Russell 2000 on April 27th and is held through Monday. The only other time that occurred was September 1st, 2020, when Apple's valuation passed that of the small cap index for only a day. Apple's premium over this group of small cap stocks continued to widen over the past 2 weeks as the consumer technology giant reported earnings that surpassed Wall Street analysts' expectations. With a market capitalization of roughly $2.7 trillion, Apple is worth roughly $100 billion more than the combined value of all 2,000 stocks in the Russell 2000. To be sure, the gap narrowed somewhat on Monday as Apple shares declined 0.4% to 171.80, while the Russell 2000 gained 1.3%. A team of stock market analysts from Bespoke Investment Group illustrated the trend in the chart shared on Twitter on Monday. Continue. Apple is back to being bigger than all 2,000 small caps in the Russell 2000. The last time it happened, it didn't last long. Continue. U.S. equity benchmarks have powered higher in 23, but some say the strength in popular indexes like the S&P 500 and NASDAQ has masked weakness in other corners of the market. Both the S&P 500, which has risen more than 7% year to date, and the NASDAQ, which has risen nearly 18%, owe the bulk of their gains to a handful of mega-cap technology companies including Apple, Microsoft, Alphabet, and Nvidia. Continue. The top 10 stocks in the S&P 500 hold a 29% weight in the index and have been responsible for around 70% of its year-to-date performance gains, especially with Microsoft. The Russell 2000, meanwhile, is essentially unchanged since the start of 23. Apple, by comparison, has risen more than 32% since January 1st. The relative weakness in small caps has inspired discussions about whether this might be a buying opportunity, as market strategists told Barron's. When Apple reported earnings for the quarter ended in March last week, the company's management revealed a surprise growth in its iPhone business, which helped to overcome a shortfall in Mac revenue. The company also promised investors billions more in dividends and stock repurchases, which helped boost the stock price. Apple shares traded higher in response. So is Apple a good company to invest in? I just invested a little bit of money in Apple. It was just under $170 a share, and I allocated a quarter of the money that I want to allocate to Apple because I think that it's a good long-term investment. Continue. Apple stock buy, sell, or hold. Apple shares have soared more than 30% in 2023. The company has rallied investors with its history of consistent gains and ability to outperform the competition. In its fiscal Q2 23, Apple's iPhone revenue beat Wall Street's expectation. Now this is very important. This is what makes Apple attractive. Samsung and some of the other phone manufacturers reported a downturn in phone sales, but Apple's revenue stayed consistent, and Apple's phone sales stayed consistent, which shows me that once you get into the Apple ecosphere, it's very hard for you to get out. You're going to have to continue to be in the Apple ecosphere, like I am with my iPhone. I wouldn't be able to switch to Samsung even if I wanted to, because everything, I'm already in the ecosystem. Continue. This company's dominance in consumer tech is nearly unrivaled, making its stock an attractive investment right now. Apple shares have climbed about 33% year-to-date despite 2 consecutive quarters of revenue declines. The company's history of consistent stock growth and dominance in consumer tech earned its patience from investors who believe its long-term potential. U.S. inflation has eased for 10 months in a row, but it remained elevated. The consumer price index was up 4.9% year over year in April. However, that was its smallest increase in 2 years. The challenging economic environment affects countless companies, and Apple has not gone unscathed. However, it continues to have excellent prospects once macroeconomic headwinds subside, thanks to its reliable iPhone business and its expansions into services such as banking. Here's why now is an exciting time to buy Apple stock. Power of the iPhone. Companies such as Samsung and Xiaomi suffer the brunt of the market contraction, with their shipments falling 19 and 23.5% respectively. However, in Apple's fiscal Q2, which ended in March, iPhone sales grew by 2% year over year to $51.3 billion, beating analysts' expectations by $2.5 billion. Apple's other product segments didn't fare well in the quarter, but the iPhone results are key, considering the device provides more than half the company's total revenue. Continue. So there's Apple. That's been this year from just under 130 to over 170. It's been trading in that range for 2 years now, since the beginning of 2022, between 180 and 130-ish, in that range. 124. So between 176 and 124, it's been trading in that range. Continue. Moreover, the iPhone has a leading market share in smartphones, which significantly boosts Apple's other efforts. Its unified ecosystem gives iPhone owners an incentive to pick up Apple's other devices over those produced by competitors, which helps explain how the company won the largest market share in tablets, smartwatches, and headphones. With that in mind, there's reason to have high hopes for Apple's expected entry into the virtual/augmented reality market later this year with the launch of a new headset. So they're getting into the VR space. They're going to get into gaming with that. The device could win it a market-leading share in a $31 billion industry that's projected to grow to $52 billion by 2027. Continue. Apple's smartphone dominance helped it become the leader in multiple areas of consumer tech, attaining nearly unrivaled brand loyalty, and consumers' devotion to its devices brought millions of people to its services. The new services segment includes platforms such as Apple TV, Apple Music, iCloud, Apple Arcade, Apple News Plus, and Apple Fitness, which reported the most growth in Q2 23 at 5% year over year, and earned the second largest portion of revenue. Digital services are an increasingly lucrative business, reflected in the segment's profit margins of 71%. That is a huge profit margin compared to products profit margins of 37%, which is still a great profit margin. Apple's venture into services strengthened its business through diversification, allowing it to lean less on product sales amid economic hurdles. In addition to content services, Apple is making moves in the financial sector. After launching its first credit card in 2019, the company began offering savings accounts last month. Those accounts garnered nearly $1 billion in deposits their first 4 days. The company's brand dominance has seen it achieve success in nearly every new market it's entered, increasing the reliability of its stock. So is Apple worth it? Is Apple worth buying? Continue. Apple stock is trading about 29 times its earnings, making it slightly expensive. However, its share price has soared 266% over the last 5 years and 966% over the last decade. That history of consistent growth makes a stock a compelling buy at almost any time. For instance, Warren Buffett first bought Apple stock in 2016, and its shares have grown more than 550% since then. Yet the conglomerate has continued to add to its stake, buying more shares as recently as the fourth quarter of 2022. Moreover, Apple's expected venture into VR/AR, alternative reality, and continuously growing services business gives the iPhone company an excellent outlook over the next year. So if you're looking for a reliable stock to hold over the next decade, Apple is an incredibly compelling option right now. That was from the Motley Fool, and Apple has a small dividend at 0.56%, but they're also doing stock buybacks, which usually boosts the price of the stock itself. Continue. Investors keep buying Tesla but dump Apple. Microsoft brokerage data shows. This is basically because Tesla has gone down in price and Apple and Microsoft have gone up in price. So a lot of people are taking profits on those stocks since they're up 33% and Microsoft is up more than 33%. But Tesla has been down this year, and so that's what this article is talking about. Next article. Who will win big tech's race for the best AI assistant? Google, Apple, Meta, or Amazon? Apple already has Siri, and so what they're doing is they're putting AI into these assistants to become better assistants for you. Morgan Stanley analysts bet on Alphabet's Google to win the race while focusing on a formula that looks for the right collective of hardware, user data, and investment capital, which is all fine and good, but Google's phone isn't performing as well as the iPhone is. And I think that Apple might actually do very well in this space. If they can do that, because the iPhone is already your assistant, is already the majority of people's assistant, where they say, you know, hey Siri, and then I knew it was gonna go off. And then they tell it what they wanted to say. Continue. Personal assistants such as Alexa and Siri are being offered by the biggest names in technology, and Morgan Stanley analysts said Wednesday that one company would be favored to take a big chunk of that market as artificial intelligence adds to their capabilities. Morgan Stanley analysts think Alphabet, Google is best positioned on the hardware, data, and AI tech fronts as Amazon and Meta platforms. AIs need behavior changes to lead, and Apple's AI still faces uncertainty. But Google's AI faced uncertainty just 4 weeks ago when they put it to the test and it performed horribly. That's a good question, Logan. Logan asks off topic, but have you ever thought about making an ETF, like an Patrick ETF or RT ETF? I would have to look into that, see what that would take for you to even make that, and how that would go. But that is interesting. All right, where were we? Current assistants like Amazon's Alexa, Google Assistant, and Apple Siri have had limited commercial and consumer adoption, the analyst said, but they see assistants driven by large language models or LLMs, which ChatGPT is one of. Changing this with these tools enablers of the structural acceleration in online consumer spend and online ad growth we see coming from AI. So now if I ask Siri a question, what she'll do is what she just did is she'd say, I found this on the web. But with the integration of this, they'll be able to give you, whether it's Alexa or Siri or whatever else, they'll be able to give you a proper response every single time, which would be more beneficial. Or you'll be able to, integrate more apps with it and even tell it to do some trades for you. So you won't even have to do it yourself anymore. You can say, Alexa or Siri or whatever, buy 100 shares of Apple stock, and they'll go ahead and do that, which would be incredible. Continue. You'd have your own assistant in your pocket. We see transformer models and large language models leading into the development of next-gen AI assistants with increased personalization, incremental use cases, interactive search and cross-sector online shopping with follow-ups, improved personalization and recommendations, calendar management, scheduling, automated action/task completion, monitoring of health status and financial condition, improved education, tutoring, and more, and higher consumer utility. Morgan Stanley analyst Brian Nowak covers Amazon, Alphabet, and Meta, while Eric Woodring covers Apple. Wrote in the note, they see AI as a $6 trillion opportunity, but believe that competing and winning in the assistant category will require 3 essentials: hardware, which Apple has, proprietary data, which Apple has, and AI investment/capabilities in which Apple is still lagging. But Apple has a ton of cash that they can use, and they just need to stop buying back stock and then taking some of these cash and investing it in AI investment and capabilities, and I think that they will win this race. Here are the 4 big tech companies breakdown in those regards. Google has about 3 billion users on an estimated 2.6 billion Android devices and 350 million from other devices, the analyst said, but data is a key differentiator. Continue. YouTube, Google Maps, and productivity tools like Gmail is industry leading. Morgan Stanley said, plus Google has existing partner developer relations through its AI developer tools that we expect to further its data set and reach over time, while state-of-the-art LLMs and multimodal models such as LMDA, whatever else that is. Amazon has the largest one-person consumer purchase data set and expanding AI capabilities, but its hardware lags best of breed, even with 400 million devices compared with Google and Apple, analysts said. Let's go to the Apple one, see what that one says. Meanwhile, Apple is positioned to deliver a broad-based personal AI assistant, but AI model capabilities are less clear. Continue. Hardware is not a problem with about 2 billion devices, roughly 1.2 billion of those iPhones, and most of those compatible with Siri, which is well positioned to be integrated with LLMs, and Apple has a ton of user data. The lack of any performance data on Apple's AI capabilities are still a question mark, however. Little has been said around whether Apple is building its own LLMs or if they decide to partner with an open source vendor such as Stability AI. But Apple usually doesn't say anything until they're ready to bring something out to market anyway. They're a very secretive company. That's why you usually don't see, the new iPhone before it comes out. You see a couple of images online, but then the finished product never looks like it. And so I think that Apple is a great opportunity there, especially when it comes to AI and when it comes to AI assistants such as Siri. Continue. So Apple has a good amount of end user devices. They have a huge amount of proprietary data, but they're lagging in the AI models and apps, which Google is not. But I think Apple is a great opportunity. Google's a good opportunity too, especially now that they're figuring out their Bard AI language model. But all of this remains to be seen as well, because I believe today the CEO of ChatGPT is going to be on the Hill in front of the Senate talking about AI restrictions and some laws on AI. Continue. All 4 companies have been seeing stock gains this year as excitement for generative AI has ramped up. Apple stock is up 33.6, Facebook is up 93.7. That is up 93.7 after Jim Cramer said it's not a good company. Alphabet shares have increased 26.7, and Amazon stock is up by 31.2. All right, what else do we have? He has a superpower. Jim Cramer trashes Palantir, says it isn't even a real company. Past 5 days, up 32.8%. Continue. CEOs, I fear no man, but that thing, it scares me, yes. Bye. Continue. Apple Card savings account has an attractive 4.15% interest rate. So this is another area that Apple is doing well in. And they partner with Goldman Sachs, but I wouldn't be surprised if at some point they're going to go out on their own and start an Apple Bank or whatever it is, no longer in partnership with Goldman Sachs or any other bank, but just doing it themselves. Continue. So just another reason why I think Apple's a good investment. Apple has been a good investment. Continue. Next article. This one is 3 technology stocks worth consideration: Texas Instruments, Apple, and Microsoft, based on AI factors. All right, so the stock to research is Apple. See if that's something that you want to invest in. I put a quarter of my allocation into Apple already. I want to see how it goes over the next couple of months. I'll be adding to that position, and I'll be holding that long term. Patrick, I had 1,000 shares of Luokong. They did a reverse split. Thoughts on reverse splits? They did a reverse split, Bill, I believe, to stay compliant with, I believe they're listed on the NASDAQ, to stay compliant with NASDAQ so that they will be able to keep being listed, because they were about to be delisted. But that was one of those companies that was booming during COVID, when all those companies were booming. I still have mine. I'm down 93% on it. And I still have mine. That's one of those that I didn't put a stop loss on, which is why stop losses are always a good thing to do with your stock. Do we have any other articles, or is that it? From Growth to Value tweeted this morning, when it's a bull market, most people think it'll never end. When it's a bear market, most people think it'll never end. So you can't time the market. Anybody who says they can time the market is lying to you. So it's best just to keep investing and then play with some of your, what you would consider play money. You can play the market with that, but the majority of your portfolio should be invested and should stay invested over the long run, because that is how you grow wealth. I read a statistic, or I heard a statistic. I was listening to a book. I believe 97 to 90, it's in the 90s. 90% of Warren Buffett's wealth was made after his 60th birthday. So that just shows you the power of compounding, where, yes, in the beginning it might be slow, but then it just speeds up and skyrockets. And now he's worth $115 billion. Continue. Jim Cramer said he thinks Amazon is an overlooked player in the AI space. Watch out, Amazon. I think we have one last one. Sad But True by Charles Payne, who's one of my favorite to watch on Fox Business. CEO of Silicon Valley Bank. This is to when he was in front of the Senate. I'm truly sorry. Senators, good enough for us. Where's everyone going for lunch? That's basically how the meeting goes. Good morning, Omir. I'm glad you went to the revival. Speaking of revival, if you are anywhere close to Tennessee in that area, Pastor Jonathan, Evangelist Jonathan, is going to be at Faith Life Church tonight and through Friday at 10 a.m. and 7 p.m. So make sure that you make it out for that at Faith Life Church in Jackson, Tennessee. Omir was there. And if you'd like to invest in Revival today, here's the opportunity to do that. Here are the ways to give. Best investment you can make, better than any stock market, is investing in the kingdom of God. And here are the ways to give. Cash App, Venmo, PayPal, text to give, hashtag donate on Facebook, cryptocurrencies, we got it all. You can also send a gift to Revival Today, P.O. Box 7, Prosperity, Pennsylvania, 15329. And then don't forget to claim your offer at revivaltoday.com/offer. Let's see, what am I giving away today? How to Make Money in the Stock Market by William J. O'Neill. For those of you who are new to investing, this would be a good book to start out with. Some of it is a little dry, but you can always look up what it means. So I'll give that away today as a way of saying thank you for investing in Revival Today. Markets are still down, a little unchanged here. Dow Jones down 150 points, S&P down 9, and the NASDAQ down just 6. So it looks like the NASDAQ might go into positive territory here. Let's see, oil is up slightly, almost 0.5%, and gold and silver are down. So that's what the market's looking like today. Thanks for tuning in, everybody. I'll be back with you next week. Go out there and make some money today, and I will see you then. Have a good day.